Today with me, I have Denise and Stuart. I am blown away by their ingenuity and ability to reinvent and really turn a lot of situations into really cool outcomes. So Denise, Stuart, thank you for being here.
Nice to be here.
Thank you. We're happy to be here as well.
Let's talk a little bit about your background because you guys didn't start in this space initially, right? So share a little bit about that.
Well, in terms of background, I mean, the very background that gets us to where we are today, right? I used to teach. I've owned a business. I've lived overseas, worked for the government. And actually, that's where Stuart and I had met because we had each just gone through a divorce. So that in itself created a lot of havoc in our finances. But I'll just recap you where you came from, Stuart.
Yeah, I mean, I grew up as the son of a Canadian military officer. When people say, "Where's your hometown?" I don't have a hometown. As an Air Force brat, I grew up all over the place. But I ended up joining the federal government in Halifax and moved to Ottawa. Went through a divorce, as Denise said. We were an office romance. We met in the office.
I wasn't reporting to him.
Basically,
He was reporting to me.
After we were seeing each other for about 5 years, she was sure that she wasn't ready to jump out of the frying pan into the fire and get into a new relationship.
So I made him wait.
We ended up together for over 25 years.
Actually married 21 at the end of this month.
We were both working full-time for the federal government with the 20/80 rule. 20% of the people in the federal government do 80% of the work, and we were part of the 20%. Even though our contract said that we were to work 37 and a half hours, we couldn't do that. We ended up working lots more hours.
More than double that on a weekly basis.
And we were putting in 60, 70-hour weeks in order to get things done. I had risen up to the executive level. Denise was working as the strategic advisor to a vice president in a major government department. So we both had fairly high pressure jobs, but coming out of the divorce, our finances had been damaged.
Shot.
And
Not just damaged, shot.
We knew we had to do something else, and we were looking around for a side hustle. Basically, we found real estate, and we decided to invest in real estate, although I was slow on the uptake. When Denise and I first put our houses together, she was living in a condo. I had a
condo townhouse that I had bought.
Yeah. And I was living in a single family home. We decided that we'd move into my house, and Denise said, "Well, why don't we put her condo up as a rental?" And my immediate reaction, "Are you nuts? Who wants to deal with tenants and toilets? 3 o'clock phone calls." So we sold her condo. And unfortunately, the real estate market in Ottawa had taken a downturn at that point. And so although she came out okay, it wasn't the result that we should have gotten on selling that condo. Years later, when we decided to invest in real estate, I realized that if I had been a little bit smarter at the time, and if we'd held onto her condo, it would be fully paid off.
Oh, yeah.
It would be cash flowing like a real beauty. But it is what it is. And it's just another lesson learned, and we move forward from that.
I was going to say, one of the things that we have to be proud of, like I said, divorce wreaked havoc on our finances, but we literally started from scratch again, both of us, from zero. And even to the point, and people sometimes don't realize, when I bought my condo, when he had bought his house, we had to get the help of our parents for a down payment. So when we say we started with nothing, that's exactly what we did. We started with nothing. Yeah.
So Stuart had made the comment that years later, you guys came back to real estate. What was the, I guess, light bulb moment, or what happened? Or take us back to that when you decided to get back into real estate, actually take real estate seriously.
Well, actually, we were looking for, as Stuart said, a side hustle at some point, and we had gone to a symposium in Ottawa, and they had all kinds of businesses, and one of them was real estate. And we thought maybe that's what we should do, and we signed up. And at the time, it was good that they had that 10-day cool-off period because we canceled. And it was somebody from the States.
I mean, we just knew at that point that our lifestyle was such that we just didn't have the time.
Like 70 hours a week working. Like I thought, when are we going to do this?
And the other thing was that we have strong ethics. And although you will hear about people who have government jobs running a business out of their government office, that wasn't Denise and I.
No.
When we were on government time, paid by the government, paid by the taxpayers, we devoted our time to the government. So we couldn't run a business at the same time that we were working for the government.
But the one thing we noticed, and we were thinking, how are we going to work towards our retirement? Like, look at the hours we're working. We don't have time for a side hustle. We're looking at our retirement savings, which was in RRSPs at the time. And I'm going, oh my gosh, these are just tanking. they're not growing. Like, what are we going to do? And I remember at one point looking at an 8-year period, it had not moved. Mind you, it went like this, but 8 years later, I'm back where I was 8 years before. And I thought, there's got to be a better way. And you know what? When the student is ready, the teacher will appear. And I guess we saw something that brought us into real estate. And in 2009, we started educating ourselves because we had learned one very big, important lesson. We had invested in stocks, lost everything because we got caught in the hype of things, right?
Right.
And we lost everything. Well, I shouldn't say that, except for $18.32.
I mean,
Because that's all that was left after tens of thousands of dollars.
It was,
So,
I refer to that as our MBA because we invested in something without understanding it and without educating ourselves.
So we decided with real estate, we're going to educate ourselves first. So that's the first thing we did before even investing. So we took courses, and that's where we started.
So you've gone on to do well into 8 figures now in transactions, but maybe take us back to when you, so what was that first deal, that first next thing after your personal residence, and like, what was that first thing?
The first thing that happened is when I left government, I retired.
Okay.
They offered a severance pay, and I decided to take it in RRSPs.
I mean, they said you could either have it in cash or RRSPs, and our RRSPs had been invested in mutual funds. The stock market was tanking, so we said, we'll take it cash. And they said, okay, here's how much you're going to get after the CRA takes their share. We said, okay, we'll take it in RRSPs.
And because we were taking real estate courses, that amount of money that I got as a severance pay from the government, I went to a table of 8 investors and I just said, I got this many thousands of dollars for an RRSP mortgage. Is anybody interested? And everybody said, pick me, pick me, pick me. And I go, oh, maybe there is something to this.
Blown away by their ingenuity and ability to.
They bid amongst themselves as to what rate they were going to give me. And
No
when it
way.
started slowing down, I said, sold. And I ended up using that money on a second mortgage on a rent-to-own, a 3-year rent-to-own.
Okay.
And did I know what I was doing at the time? Absolutely not. Found a lawyer. It was the first time she was doing an RRSP mortgage. So we learned together. And then we quickly realized that, you know what, these people are borrowers. Why can't we be borrowers as well? So we reverse engineered it. And that's what we did. However, so the very first transaction we ever did was an RRSP mortgage. As we were beginning to put into practice what we had learned about real estate and looking for properties. And at the time we were putting offer after offer after offer, and nothing was happening. And it took us 5 months before we got our very first property. And I laugh because years later, somebody had called me because they wanted some coaching. And I was asking him a couple of questions. He goes, oh my gosh, this has been 2 weeks. I've just done offer after offer. Nothing's happening. And I wanted to laugh at that point until I said, my very first deal, it took us 5 months to get that first deal. He goes, okay, and hung up, and that was it.
Made you a bad coach salesperson, huh?
Well, that's it.
But no, so that very first property, you know how they say, buy close to home. Don't do anything major, manage it yourself. So we live in Ottawa. We bought in Barrie, and we did a secondary dwelling unit
So
on it too.
if somebody doesn't know the geography, that's a 5-hour drive.
Yeah, so that's where we bought our very first property, and we managed it. And then I would drive out there. I hired all of the tradespeople and everything else. We just managed it all. And even to this day, we still manage that property because we got great tenants. And the very first property we bought in 2010, and we still own it today. It's still cash flowing nicely.
Wow. So for our American friends in RRSP, I should clarify, is similar to a 401k. And if Denise and Stuart mentioned TFSA, that's like a Roth IRA. So effectively registered plans. And what's interesting is that back in those days, very few people were doing what you guys were doing. I mean, there's some people talking about it, and you know, I was in the space, but even on the institutional side, it was like it was an afterthought. So the fact that that was your primary method, talk about uncovering an unfair advantage, because even the lawyers, you're right. Like I remember being on the other side of those conversations, and it's like, what's an RRSP mortgage? They're almost looking at you like, no, you can't do that. And you're like, well, here are the rules. Like, yes, I can. Just go figure it out, right? So that's
and the funny part for me is I heard the word RRSP mortgage at some point, and I turned around and said, who said it? And the people were with me go, what are you talking about? We didn't hear anything. I heard it, but that was enough to pique my interest to find out about it. And that's when we converted my severance pay, like I said, to registered funds. And I thought, I'm going to find a way to do this.
The big thing is it's been really useful for us to pursue
Oh.
this strategy because people are getting crappy returns. If you go to the bank is only going to talk to you about their products. And their products are all mutual funds, stock market, GICs, which are like CDs. People these days are getting poor returns, sometimes a lot less than inflation. So as such, they're looking for safe, secure ways to invest in order to grow their retirement portfolio. We found that it's handy as a real estate investor to have access to that capital because it's a private loan, so you can negotiate the terms and the rates, which you can't do with an institution, with a financial institution. So it's a lot more flexible. We have done a lot of mortgages with people where they don't need monthly payments back into their registered fund. They're just looking for an annual payment. They just want to make sure that they're getting their money at the end of it. So if we're using it for a development project or a renovation project, we don't have a tenant there, so we don't have incoming revenue. So it's nice for cash flow if we can defer the payment on the mortgage until we cash out, either by refinancing or by selling
or whatever.
Win-win situation for us as the investor and for the plan holder, because
Right.
they have a secure income coming in that's guaranteed. So we've started building this. We've been talking about this. We've got a lot of people that have come to us and said, how do I participate?
Right. So, Stuart, give me an example, I guess, practically of a scenario like that playing out to its full. Like, someone comes to you and says, "Hey, Stuart, I got this, X amount of dollars," and you guys are sitting there, you guys are working on the project. Like, what does that look like? Walk me through like a full cycle of.
I'll give you an example of a flip that we did. Because we network, because we talk about this to people, people are curious, they ask. So we help them with this, right? So we went to look at this property. We thought, yeah, this is a property we'd like to do. So we walked out with a realtor. His office was 10 minutes away. So what we did is that within that 10 minutes of drive there, I made 2 calls and they said, yeah, we're in. We went to the realtor's office, wrote up the offer because we knew where the cash was already to buy this property. And we put in the offer and we closed within 7 days.
So it was unconditional. And this particular building was owned by an elderly gentleman who had fallen on hard times. His family was at a distance and he wasn't able to support himself. And he was having financial difficulties. The family just wanted him out of the house so that they could take care of him. So they were anxious to close quickly, which we were able to do because we had access to the funds. We knew the process. We were able to put the mortgage in place very quickly. We made the offer in the afternoon. They accepted it by supper time.
So when it came time for the mortgage, because the rules back then is I did the mortgage. And as long as I have 2 lawyers to work with, one on both sides, one as a lender, one as a borrower, then we're good to go and we're able to close. And I work with the trustee that where the registered funds are being held from our lender and the lawyers, and we got it done. And we've developed such a process that we've been able to do this rather quickly. I think the quickest we've ever closed on a mortgage was 3 days, which most people say, oh, you can't do that. And I go, yeah,
Right.
just because we've done so many and have gotten so proficient with the process and everything that we can act quickly sometimes when an opportunity occurs and we just reach out to our network and we get the funds. I think one we had told you as well, there was a large property that we bought. It was a very hot market at the time, but we're talking huge property here. And that's the one that we're working on. That's going to be severed, developed into 5 lots actually. But all this was we bought it and it was 1.327, I think. I forget the exact number right now. $1 million was the purchase, and we had 3 days to lift conditions. We saw it. We put in an offer, raised the money, and we closed.
And with the mortgage instrument that you utilize, effectively you're empowering people to be able to work with their existing resources that they don't want to stick in the stock market or something like this. That's more or less what you guys are saying.
Yeah,
that's it.
Excellent.
I mean, because of the Canada Revenue Agency rules, you can't put your RRSP onto an income property that you own. So it has to be operating, a third party. So there's a lot of people that are willing to use their registered funds in order to fund our mortgages. And we've done the same thing with our registered funds, with our RRSPs and our tax-free savings accounts, in that we will lend that money out to other investors who are doing projects. So, I mean, we're both borrowers and lenders, and what it's done, it's great because we haven't lost any money in our registered funds since we've been investing in mortgages.
Never
it's only
lost
grown.
never lost a penny of investors' money. And when we found out about RRSP mortgages, that's why we're lenders as well of our funds. And all we have seen is growth. There's no ups and downs like the stock market. It's just growth.
You know, it's interesting because you're not the first people to tell me that there's whether it's a private debt fund or mortgage fund or individual charge mortgages like what you're talking about. It's interesting because and maybe this is a good transition to talk about due diligence and underwriting and things like this, because ultimately if you're going in right, then you've got plenty of margin there to protect yourself, right? So can you guys maybe talk a little bit about risk mitigation, both in terms of for yourselves when you're looking at what makes a good deal and whether getting the mortgage, investment on board makes sense. And maybe a good follow-up to that would be if somebody's considering, entertaining these types of things for themselves, what kind of due diligence should they be looking for, asking for? Like maybe just walk us through some of that.
Really what it comes down to is that a lot of people get spooked with the idea that this is something special, that this is an RRSP mortgage. Really what it is it's just a private loan. And so as you're doing your underwriting, the important thing is to take a look at all of the numbers that are going into the deal. Really what you can do with an RRSP mortgage is, the interest rates are probably a little bit higher than you're paying at a financial institution,
Right.
But the terms are a whole lot more flexible. So you're able to calculate out over the time frame of the project exactly what the costs are going to be. Now, the one thing that we do tell people is that RRSP mortgages, because they do carry a higher rate of interest usually than an institutional loan, you don't want to do this for the long term. This is for the length of a project where you're bringing up the value of your project. So if you're buying something that needs renovations, banks in Canada especially traditionally hate to finance something that's going to be used as a fix and flip. And as a matter of fact, there's new rules coming in now that they're not even going to allow refinancing for a period of time. They expect people to at least hold it for a year.
That's
sometimes
already
2
in.
years.
Yeah.
That's in.
Longer, I think now.
So the nice thing about using an RRSP mortgage is you're in control of that. So you buy the property with the RRSP mortgage, do the renovations, get it to the point where you can either refinance or sell it and pay off the private loan. You know going in as you're doing your underwriting what those costs are going to be. So it's a matter of doing your due diligence to make sure that your funds going in, your cost going in, your expected costs for the length of the project and your cost to get out are still going to give you a nice margin so that you've got profit coming out at the end. We had a mentor who at one point used the strategy that if you're going to do a flip, make sure that after all of your costs are in, including a 10% contingency, that you've got a 10% profit. And if you're not going to use any of the contingency, which I've never seen happen, but if you're not going to use any of the contingency, then you got a 20% profit on your final price.
But even from the due diligence side, the thing is that people have to remember as well, still do all of your inspections and everything else that you need to do. Some of them that we know that are going to be redeveloped, and it doesn't matter what kind of shape it's in, right? As long as a lot of the properties we bought, especially now, are properties that may be a bungalow or a duplex right now, but is on a large lot and one that can be severed or already has zoning to allow intensification. So that's what we're looking at now, so that we can actually get some rents covering while we work with all of the processes to get to the development stage, and then we're going to knock it down and then build up. So that's like where we are today. But we've done so many different strategies over the years that it's given us that, call it expertise in using registered funds, but being able to help people too. Now, so people know we're not financial planners, we're not mortgage agents, we're not accountants. But the thing is, we have done so much of this that we've been able to help people, but we've developed that know, trust, and like factor as well. And no one will ever invest with you if you don't develop that first. They must do that. So for us, we are open. So when an investor is looking for us, it's kind of funny. We say you can even ask for their credit report because they're investing in the person. The project, yes, it's good. It may be fancy. It's something that they think is going to be good, but really they're not investing in the project. They're investing in you because you're the one that is ultimately responsible to make sure that they get their money back with interest.
Now, the other thing that we have done over time, and we anytime that we teach this strategy to people, we talk about the importance of putting together a comprehensive investor package. This is basically the explanation. We have, I mean, since we've been working with you, we're now using the term pitch deck. Before we were just talking about doing a package that lays out who you are, what your project is, and why the project is a good deal. So you've got some numbers in there that explain the underwriting in order to give the potential lender a comfort level that you know what you're doing, that when they put their money in, they're going to get their money back. Years ago, I heard Kevin O'Leary use the line that he sees every investment as sending his dollars out as little soldiers going off to battle. Yeah. And he likes to see his soldiers all come safely home and bring friends.
Bring some prisoners, bring some friends. Yeah.
So, I mean, it's the same thing that we point out, that as you're doing your underwriting, anytime we're taking a look at a project, if it's something that we're promoting, then we're going to make sure that it makes sense. And we can write up the investor package to show to people that it does make sense and it's a safe investment, that they're going to get their money back. And anytime somebody wants to come to us to borrow money, we ask for that same thing. We say, you've got to put together a package to show us why this is a good deal.
Let the numbers do the talking, leave the emotions out of it. I mean, we've seen so many investors, oh, but this is, such a great property. It doesn't matter.
Right.
It really does not matter. What do the numbers tell you? And that's what you have to make sure, that the numbers work, that there's still money to pay back your investors. There's money to be made. Does the odd project kind of break out even? Some of their smaller projects that we've done, yes. And it's just, the sign of the times, but you learn from it and you own up and then you do better next time, right? It's all a learning process. So we started actually in 2010. At retirement is when we started.
What are some, in your mind, 4 or 5 maybe red flags as a potential investor? If you're looking to partner up with someone or lend to them or work with them, what comes to mind in your perspective?
One of the things that we've said is that we will never lend money to somebody on their first project. And the reason for that is that the first project is where you make all your mistakes and you're not going to have enough meat on the bone at the end of the day. Now, the only exception to that is if someone is working carefully with a coach or a mentor that we trust.
Know very well as well.
Then at that point, we'll know that they're leaning and they're getting good advice and they're going to minimize their mistakes.
Another big thing is we call that pitch deck or that investor package. And I'm amazed on how many people approach us and don't have anything to show what it is that they want us to invest in. I've heard on the other side too, that we've had people contact us, they're having a problem. And I say, well, what does your paperwork say? And to actually be told, what paperwork? And I'm going, oh my gosh. And there's been people out there that have lost money because of that. I had someone reach out to me. Basically I answered something, I think it was on Facebook, says, who knows a lawyer for an RSP mortgage? And I said, well, first of all, what province are you in? And as it turned out, this woman was, I think, in Alberta or something. Like, we ended up talking, and this project was in Prince Edward Island with an investor she did not know, didn't have a package, but yet she's looking for a lawyer to do an RSP mortgage. And I thought, that's not how it works. There are processes here in place to follow. And anyways, I think she wrote back maybe a month later. She says, thank you. I didn't do the deal. It would not have been a good deal for her, let's just say, because she was walking in blindly, not knowing what she was doing. And that's the whole thing, right? It's like anything else. Educate yourself, because not only do you want to preserve your capital, you want to preserve the other people's capital too, depending on which side of the fence you are in. Are you a borrower or are you a lender? And we were both sides. So that's why it gives us an advantage as well over others.
When it comes to being a lender, you want to make sure that you understand the deal and that the deal makes sense. I mean, I was in a Facebook group the other day where I saw someone who had invested in this apartment building that they got at a real sweet deal. And they put money into this apartment building in order to fix it up. And the challenge was that they did the effort in order to improve the tenant mix within the building. And they were getting better tenants in. But after a year, they realized that as they were putting new tenants in, the tenants were not staying. And when they did the analysis, they discovered that the reason why the tenants weren't staying is that these quality tenants didn't want to live in that neighborhood. The building was being improved, but the neighborhood wasn't. As a lender, it's great to know that project, but I want to know lots about that project so that I can make sure that I don't actually invest in something that's a B-level building in a C-level neighborhood. That would be a red flag is, all right, am I getting enough information about the neighborhood? Why is this neighborhood a good neighborhood? Is it a rising economy or a declining economy? One of the things that Denise and I made the decision some time ago is we only invest in urban areas. So if somebody comes to us with a proposal where they're looking to borrow money for a project that's in a rural area on well and septic, we thank them very kindly and tell them that that's not in our wheelhouse. That's not the sort of project we look at. So it's a matter of making sure that as a lender, you know what you're comfortable investing in and then stick to that. Don't be dragged down because something sounds good.
So just to ask the silly question, why wouldn't you invest in a rural area with septic and all that stuff?
For us, I think it's a question of if something went wrong and you wanted to sell quickly, it won't.
Real estate's one of those things where it's real easy to get into it, but not so easy to get out, especially if you don't do the right deal, right? So
get to know, build a relationship with the people that you're lending money to, because there's certain rules that apply when you're dealing with somebody else's money, and they need to be followed.
And if you're a borrower, as a borrower, what are some of the common mistakes borrowers make when they borrow maybe the first handful of times?
Yeah, first thing they do, they go on Facebook, they go, hey, I'm looking for this amount of money and I'll pay you this much and whatnot. So that we see out there all the time. And the thing is, the Securities Commission has rules out there as to how you can borrow funds. So there's all kinds of these financial bodies here that kind of overlook. And the thing is people have been scrutinized now and are actually under investigation with securities commissions because of some of the things they have done online. And we tell people, don't. There's so many different ways to be able to access lenders. Don't go online and get yourself into trouble because it's against the law to start off with.
I mean, it's important. Know the rules and follow them. I mean, I talk about the fact as a sports analogy, you need to know the rules of the sport you're playing and follow those, because there's no sense showing up at the hockey arena with your baseball bat and your cleats. If you understand the rules of the game you're in and you follow them, it makes life much easier. So as a borrower, we make sure that we understand the rules with Canada Revenue Agency, because when you're dealing with registered funds, there are very strict rules around that. The Canada Revenue Agency feels that until you've paid income tax on that money, it actually belongs to Canada Revenue Agency, and they're very cautious about what they want you to do with it. So there are things that you're allowed to do and things you're not allowed to do. So it's a matter of understanding those rules.
Trustee rules as well that need to be followed when they're registered funds, because they must be managed by a trustee. So their trustee has their own rules too. And like I mentioned, Securities Commission, because Securities Commission has certain exemptions that allow you to borrow other people's funds. So the thing is, where does it fit in and what paperwork do you need for people to stay again within the law to give you that legality, if you want the legal option to be able to do this. So again, these are all things that are super important, and most people go out there and have no clue about any laws.
We've both seen it online where people are recklessly promote, and I don't think they're malicious, but I just, ignorance is an excuse either, right? So that's one of those things.
And I mean, I've seen new investors that don't realize that they're breaking the law by going on and advertising for money and advertising interest rates and everything. And they don't know that they need to be licensed in order to make that kind of a promotion online. And it's, as you say, it's malicious. It's just lack of understanding, lack of knowledge.
I mean, without a securities lawyer present, there's ways to be able to legally do those types of outright promotions. There's all kinds of what's called exemptions in Canada and the US, but challenge is that most people don't have the line of sight over that. And I'm glad you guys brought that up, because that's one of my pet peeves. Whenever I go on Facebook, I'm like, you've retired already, but you don't sound all that retired.
Well, I mean, Denise,
what I like to say is we're Zoomers, which is just boomers with a lot of zip.
The other line that we like to use is, we retired from government, we did not retire from life.
What is the, I always look for, what drives people, right? What's the why? And I to whatever extent you guys are comfortable to share, I just genuinely curious, and because I look at you guys and I'm like, okay, like this is a good blueprint towards, vitality, life, outlook on everything. And, so just if whatever you guys want to share in that regard, what's the secret?
We have a blended family. I had 2 children from my first marriage. Denise had 2 children from her first marriage. Collectively, we have 8 grandchildren. 4 of those grandchildren live in the Ottawa area. 2 of the grandchildren live in Germany. 2 of the grandchildren live in California.
So it's nice to be able to fly out and decide to go spend 6 weeks with them if need be. Or we just spent a month in Europe. 2 weeks of that was with sort of my daughter because she lives in Berlin and the grandkids. So we took a bit of a holiday and then we spent it with family. So we spent Christmas in Austria, and because they're in Berlin, then we went to Berlin and had New Year's there. So it's nice to be able to pick up and go visit family and spend that time with them. So that's something that is very important to us. But one of the things when we first got into this is, first of all, is like securing our retirement, because like I said, our finances, we started at zero when we started our lives together. And, you know, our retirement savings, RRSPs and TFSAs, again, Roth IRAs or 401ks, right, for people, like had tanked, you know, through the dot-com bust and the financial crisis. And we thought, what are we going to do later? So we had to secure a future for ourselves, but also secures a future for our family. We are able to donate more. I know this sounds kind of funny. One year, we actually got audited by CRA because they said nobody gives that much. And we had to prove that these were all donations we had given, right? Again, we don't live in a big fancy house because that's not what drives us. It really isn't.
I mean,
and we like to volunteer.
The other thing is that since we've been investing in real estate, we participated in a lot of networking groups, in various groups. We've met a lot of people, and the interpersonal relations actually drive us a lot. We like to help other investors. I remember
the root of what we do basically is helping others.
Very early in our career, we had a home equity line of credit on our personal residence, and it was untouched. And we were talking to friends, and they had run into a challenge. They had made an offer on a house. Their closing was coming up, and their mortgage broker goofed them up. And they were panicking because they weren't sure exactly what to do because the closing was coming up and they weren't going to have a mortgage in place for at least 2 weeks. So we loaned them the money. We just took our line of credit and we loaned them the money to actually buy the house cash. We were able to do that because
this is before we started real estate.
Well,
we were just learning at that time.
It was early on, but it's the fact that we have been able over the years to do various things in order to help people that we've met, and it feeds us emotionally to be able to help people. We've done a lot of teaching. We've done a lot of coaching because it's something that we like to do. We like to teach. We like to coach. We like to share our knowledge. And I mean, we've got a vast experience.
Some of the projects that we were able to do was because of helping somebody in dire need. For instance, just from a personal point of view, we had somebody at church that they had to get out of their house. Their house is so full of mold. They had to leave. They asked us if we do a rent to own with them. And we sat down with them. We started talking to them. And what we found out is that because he was on disability, they qualified under be able to use their own personal RSPs, even though it had not been 4 years since they had left their own house because they were now renting because of medical bills and all of this. So we're able to help them and direct them. And somebody says, oh, you must have gotten paid a pretty penny for that. I said, we didn't get paid a cent. We just help them. And we help them get into a home of their own by helping them know what their rights were for the situation that they were in.
And we connected them with our realtor, and we connected them with a mortgage broker in order to put this all together.
And we help them out that way. We help real estate investors that were about to be sued because they could not make good on their property. They said, Denise and Stuart, can you help us out? And we looked at it and we said, okay, now this one here turned out to be a sweet deal. Actually, it was, again, a few years back, but it was a rent to own where we did a second mortgage, you know, like an 80% loan to value is what you're buying it. So we got a traditional financing for that, but we had a 10% RSP mortgage that we put on there. And the tenant buyer came in with a 10% option payment. So our cost for that rent to own was basically our closing costs. Now, big, long story about the problems we had throughout. But at the end of the whole deal, again, creating win-win situations, and we made a really good profit at the end. That was helping a real estate investor who could not follow on his deal. But then, like I said, we've helped young families that were about to go bankrupt if somebody didn't buy their home, of which we did, and we've redeveloped and built on it. Again, everything we do seems to want to help somebody some way or another.
Well, you guys have perfected your tool, your instrument is, using the registered plans and funds and things like this. And ultimately, there's a lot of pain out there. And if you guys can help people avoid some of that along the way, and it's a really fascinating niche. There's a saying, there's riches in the niches, right? And ultimately, you guys have really honed in on something, and that's fantastic because so many people come, they're like, oh well, I can't scale because all I do is this, or I can't scale because all I do is. I go, no, there's a way to scale everything. You know, Snickers sells billions of chocolate bars, so they've scaled, right? And it's a confectionery item. Like you could scale anything, whether it's apartment buildings, the whole rent to own model, the second mortgages, RSPs, all this stuff. Like it's just the creativity of actually pairing up the needs and the wants of people and doing it in a way that's effective. And you guys have, I think we talked about this before, you guys have done well into 8 figures now in this stuff. So it's working. So congratulations. I
Thank
appreciate
you.
you guys taking the time to kind of break some of that down and share it, because if all you have is, I say this a lot of times, if all you have is a hammer, everything becomes a nail. But as soon as you guys have multiple ways to be creative, then you know that's the value. That's where you guys are doing what you're doing. So amazing, great work. How do people get in touch with you guys if they want to learn more, either on the lending side, borrowing side? I know you guys are doing some coaching, some training as well. How do people get in touch?
Well, we are known as Denise and Stuart, and Stuart being Stuart, right? So we're known as Denise and Stuart. So we have a website, deniseandstuart.com. We have our Facebook, which is Denise and Stuart. We have Instagram, which is Denise and Stuart, or email at info@deniseandstuart.com. Various ways to get a hold of us.
Amazing. Well, I'm super appreciative of you guys coming on, taking the time, kind of sharing the story a little bit. I didn't realize that for some reason, I didn't realize that you guys had retired and then actually gone into this full time. And that's, I always thought it was like a side hustle and then you retired because of that. But, you know, for those of you listening, like, hear me, the hardest thing to do is to leave a guaranteed thing, like a government thing, especially in Canada, for those of you who are in the US, and, you know, and do this. So amazing. Congratulations. And it was really good to have you guys here.
Thanks.
Thank you so much, Marcin. This has been wonderful. Thank you.